Good night everyone and welcome to another Elliott Wave forecast technical video a day. Today is Wednesday around 11:30 p.m. Eastern time, and we're gonna go with the daily technical video day, guys. It's very simple. Nothing technically had changed on the market since the last update that we did. We're seeing more US dollar strength, and it looks like we finished the first leg most likely of the move, and now it looks like the dollar is in an irregular B way before the dollar continue to go high. The market keep being in a very nice correlation, and we believe that the dollar now should correct lower like we are expecting all day, and it looks like it's doing a flat correction. Still, we believe that the dollar is gonna hit 79.63 before going lower. All right. And remember, in the 4 hour, we should have finished the fifth swing. In other words, 1, 2, 3, 4, 5. That's the fifth swing, and now the dollar should do the 6 and a 7. And alternative is that the A leg, this leg, the letter A, is still running to the outside, and we're gonna do another marginal high, test the channel, and pull back. So more US dollar strength, and no reason at all to be short the dollar. Now, let's take a look at the dollar in the 1 hour. Looking at the dollar in the 1 hour, this is the chart that it can be telling everything tonight. Look, the blue one is the euro, the red one is the dollar Swiss, and the candles, the bars is the US dollar. As you notice here, everyone find a temporary top or bottom right here yesterday. Now the euro makes a marginal new high, the dollar makes a marginal new high, but if you take a look at the red, which is the dollar Swiss, it didn't. When you see that between the three of them, that one of the three doesn't make, or two out of three doesn't make the high or the lows, that usually is a flat. What we recommend to you guys tonight is as follows: wait a little bit before you become dollar bull, because I would say this: the best way around is if you take away, if you take away the Swiss, and sorry, the euro and the Swiss and the dollar, this is the Swiss. The Swiss didn't make the high, so what you need to do is wait for the Swiss to go down here, like around the 50 back, and when the Swiss gets here, and then you're gonna start adding now the euro. For example, if the euro is doing the flat, you're gonna add the euro, and then if the euro is doing the flat, when the Swiss gets here is when the euro is gonna be ending the running flat before going lower. All right, very simple. Like that is the way that you should trade the euro or the dollar pairs tonight. Follow the Swiss. The Swiss should do 3 weeks back. Consequently, because it didn't do the high, that means that the Swiss is the one that we should pay attention today before we become dollar bulls. Right? Now let's move on now to the indices. The S&P is a beauty. Lower, I believe that the index is within the wave 3, and I believe that the index is most likely tomorrow is gonna do a wave 4 and a 5. I recommended that everyone that is short the S&P to put the stop around 1444, 1450, and forget about the index. The index can get some legs to the downside, and the index can get to 1413, even 1400, 1395 before the index start going higher again. This is a flat. There is no triangle. This is a flat, so more downside should happen in the indices, more outside in the dollar. Now finally, I want to take a look at oil. This is oil, very interesting oil. Why? Because outside is the only, oil is the only risk instrument that really have rallied this week. Everyone had selling bad oil. Now what oil did from the lows is a 3-way move. Now what it becomes interesting is if oil is gonna make a new low here, or oil bottom here, and now oil is gonna trade higher. My recommendation is don't buy it yet, because the whole market is risk off. My recommendation is, if you're gonna buy, way around here. If you're gonna sell it around here against this high. But remember, the trend is all in oil is to the outside, so anything outside of that, selling is very risky. The trend is to the outside and the pair is being playing contrarian here. Finally, I want to mention to you guys, getting back here to the case of the euro, if you take a look at the euro only, this is a flag. This is a textbook flag. Look how many swings you got in the euro. You got 1, 2, 3, 4, 5. There is no correction in 5 swings, so consequently the euro now should rally to around 129, 129.50 before going lower if it goes for the flat. But don't be afraid, sell the euro against this secondary high, and you should be in good shape. I believe that the euro is doing a flat, like I say, based on the idea that the swings right here do not make a new high. That means that divergence between the two usually result in a flat in the one that it didn't. Alright, so that's for tonight. Very clear, very simple. Buy the dollar in any 3 ways back, sell the indices in any 3-way higher. Everything that represents risk, sell it into a 3, a 7 or an 11. So thank you guys.